Good day, it's April 22nd, 2013, and you're watching A Lesson and a Trade with Toni Hansen. Now today we're going to take a look at a strategy that I call an avalanche, and it's a form of reversal strategy where we are looking at patterns that are creating reversal triggers on the larger time frames. So as a trend is ending, or a new downtrend is beginning, you're starting to see the market shift and lead to these reversal shorts. Now the avalanche typically forms with some sort of high, whether it's a head and shoulders pattern, an inverted V, or it could be a cup with handle, or any other strategy where you're creating this turnover at highs leading to an initial continuation pattern on the downside. Now the avalanche in each of these strategies takes place right here as this channel breaks lower. We've seen a lot of securities that are starting to create this pattern lately, and a lot of them that have had really great follow through as well. So we're going to look at a couple of them that are forming as we head into this week. The first one that I want to share with you is Madison Square Garden. This is MSG, and what you're looking at right now is daily time frame. Now on this, what we're seeing is a strong rally, a shift in momentum with some upside trapping action to catch those bulls. It is pulled to the lower end of the channel and is now creating an even smaller channel in the lower 50% of this pullback. So this is a key trait that we're looking for to create these larger avalanche strategies. Next we're going to go and switch and look at this on an intraday time frame. So we're going to pull up the 60-minute chart here to begin with. And we'll tighten this up. And what you'll notice here is the shift in momentum where we're seeing the channel moving higher, but it is slowing as the overall channel moves higher. And we have a larger rapid pullback, and then here's that smaller channel that we're seeing in the lower 50%. Now if we look in the back here, we actually have a couple of other examples of this avalanche strategy. Here's one that took place a few weeks ago. Here's a second one right here, a third one right here, and a fourth one right here. And the core thing with each of these is that we are looking at these continuation patterns on the downside after it moves off of the high. So in this case, we have the inverted V in the continuation. Here's the head and shoulders in continuation, kind of a rounding off with the avalanche. And then here's a momentum reversal or momentum shift leading to continuation. Now in a lot of these, what you'll notice is that there's a two-wave bounce within this before the continuation kicks off. So a couple of these last two are really clear. Now when we go to the larger time frame, you notice that in MSG we have a larger initial bounce taking place off of the lows of the 15th, a correction here over the last couple days, and then the move into a second high here now taking place on this 60-minute time frame. So this strategy is basically taking place on a larger scale than we saw in the previous examples, but it's that same reversal pattern that creates a larger trend reversal, but is the initial continuation for a downside move. So what I'm looking for now is a smaller setup coming off of a second high to trigger the continuation move on the downside. Now, if you do miss those smaller setups, you can take a channel break, connecting these lows within this channel that is forming the avalanche. However, that can diminish the reward potential because your stop is going to be placed above your high here. So you're going to be looking at a stop around 56.77-ish on MSG, whereas a channel break would be around probably 55.28 or so when it triggers. But if you can get in with a tighter setup, you're looking at closer to probably a break of 56 as your trigger zone. Now another strategy for an avalanche is taking place on Kansas City Southern here. So this is another one that we discussed in Friday's trading group. And as you can see, it's already given some initial downside movement here taking place on the 60-minute time frame. But let's go up here to the daily first, because this is where we can really see this strategy developing on the larger scale. In the case of KSU, we also have an example of where it's more of a rounding off at highs. This is a momentum reversal that triggered here a couple of weeks ago. On the breakdown, we have one initial rally, and then we have this congestion and a pull higher that is creating a secondary move now for additional congestion that we are going to be watching for a breakdown. Now our initial support level is going to be just under 100 here, back at this congestion, and it's also going to be an equal move zone where you look at this initial drop heading into the start of April and aiming for an equal move on the downside as your target zone for this strategy. Now once again, if you can catch this within this second channel here, you can increase your reward potential compared to what you're risking. Your stop is going to be over the highs, but your entry trigger would be looking at a smaller scale strategy. That could be an avalanche on a 60-minute time frame or a 15-minute time frame. But you want to make sure that the distance between your two highs and your avalanche is at least as wide as the distance between your two lows. And that can give you that additional edge to know that you're not getting in too early and end up getting trapped if it attempts some slightly higher highs here before it ends up turning around and heading lower. So these are a couple of the ones that we were looking at in Friday's trading group, and please feel free to join us any Friday at 4 p.m. Eastern. You can learn more by checking out the link that will be included in this email. AOS is another example of one that we've been following, and this is Smith, and you can see that here is the momentum shift, the drop, and our base that is currently forming. We're going to be looking down for around the 64 zone in this particular one. With this momentum drop being so strong compared to average, there's a good chance that the continuation move will be a little bit weaker than the initial decline. So we're looking for a little bit closer of a target level on this one, of around 64.